I will illustrate to you another lie that you're constantly getting bombarded with using land ownership as an example. The total return lie. The lie that if someone has a portfolio gain of 50% for the past year, they're doing great. The thing is, they might or they might not. This is why it is very important for you to understand the concept of paper return. For that purpose, I'll use an example of two investors investing in land. Let's call them Steve and Johnny. Johnny. Why does it always have to be Johnny? So, Steve is a cash flow investor. He has worked hard for years and has managed to save $1 million. Since he grew up on a farm with his dad, it has always been his dream to own farmland. So, he decides to invest in that. He finds a great piece of land in a rural area with a lot of demand from food producers. He purchases the land and immediately rents it to one of the many companies that produce corn in the region. The land yields $100,000 per year. Steve is happy that he fulfilled his dream and is collecting the 100K check every January. Okay, so now let's go to Johnny. Johnny is our capital gains investor. He is always looking for bargains and is dreaming of having a big exit on everything he does. He managed to flip a few houses by buying low and selling high, taking advantage of the economic boom due to the expanding of the car manufacturing industry and rising real estate prices in his town. However, he is not satisfied with that. He wants more. So, he decides to make a big move. He sees that his town is expanding and decides to buy a plot of land that is right next to the edges of the town, also for $1 million like Steve. There is no demand currently for that land and he can't rent it to anyone, but he hopes that once the urban area expands, builders of industrial or residential properties will approach him with offers. Everything goes according to plan, and each year the town grows, the land appreciates in value. By the 5th year, it has now doubled, getting to $2 million. Johnny feels great. He has finally made it. He made his big hit. However, since he sees his asset appreciating so much in price, he wants to wait a bit more so that he makes even more money. On the 6th year, there is an election. A different political party comes in power and changes the laws and regulations, forcing the main employer in the town's car manufacturing industry to move. It is not a complete disaster, but some people lose their jobs and the town stops growing. Real estate prices go down towards equilibrium after the incredible boom in the last 5 years. Johnny's empty plot of land is now worth $1.3 million. He still has no one to rent it to. He is afraid it will go down even more and sells. He is furious. Yes, he still made $300,000, but he could have sold last year and made $1 million in profit. On the other hand, Steve has collected his 6th yearly paycheck of $100,000 from the farmland he owns. The companies producing food are still using the land, and since there isn't that much of a boom in that industry, the land's value is still $1 million. However, Steve is okay with that. So, let's see what has just happened. If you had asked our growth investor Johnny on the 5th year how his investment is doing, he would have said he had made 100% gain and has doubled his money. While, at the same time, Steve has been consistently making 10% in yearly income and the value of his property was flat. As we all saw, however, just 1 year later, had you asked the same question to the two, you would have had a very different answer. Steve would have told you that he is collecting his $600,000 check while Johnny exited the investment with $300,000 for 30% gain. What's the moral of the story? Well, Johnny would have been thinking he is beating Steve returns and would have been bragging how dumb Steve is to have this boring investment strategy for 5 years. However, here is the cold hard truth. You have not beaten anything until you actually sell and are in cash. Let me repeat. You have not beaten anything until you actually sell and are in cash. How many people have you seen telling you in person or online how their portfolio is doing and how they are crushing it? Have they sold? Are they in cash now? Can they go on a vacation with their portfolio gain? A lot of people thought they're becoming millionaires with the crypto boom in 2021, waiting for prices to go even higher, only to suffer 90% loss in 2022. Remember, the gains you see on your screen are paper returns. Until those returns are actually realized by you pressing the sell button and going in cash, it's just numbers and charts on a screen. It's not real.